Welcome to the Friday at 4 podcast series with your host Charles Luttrell and co-host Steve Kent.
Good afternoon, Steve. Welcome back. Friday at 4.
Hey Chuck, great to be back. I love
Yeah.
today. It's been a good day. So yeah, things are good.
I don't know about you, but this week was going by a little slow. I'm kind of glad time slowed down
Really?
this week. For me, it's been very
Oh,
productive, a long, productive week. I got a lot done, and editing is going well for episode 11.
good,
And
good.
moving along.
Yeah. So yours was slow. Mine went real quick. Also busy like you, but real quick. And I have a whole bunch of stuff to finish tonight and tomorrow. Yes,
Oh
tomorrow's
man,
Saturday, but I got a
oh
whole
man,
bunch of stuff to finish tomorrow. But the
yeah,
goal is get it all done tomorrow and do nothing on Sunday. That's my
yeah. I
goal.
wish I could do that. Yeah.
That's
So
my goal.
today was a stay indoors day and catch up on a lot of
Oh,
things. So I
okay.
didn't get out today, so it's okay. It's a stay home day. I'm working,
Okay.
getting things done. I
Yeah.
got a lot accomplished. So yeah,
Good. Well, there you go. So, okay.
yeah.
Good stuff.
So yeah. So topic for today. Let's get this thing started. Um,
So,
yeah, it's
kicking around a
interesting.
whole bunch of ideas, and I figured let's go back to the basics.
I
Let's
think we
go.
talked about this once before, but briefly. I don't think we really covered it that much. But I know we talked about it.
So, the basics, I call it financial literacy 101.
Yeah,
It's very basic stuff because I don't want to get technical, don't have a computer, to draw things on. Um, this is not a math lesson. I don't want to, I just want to give high level for people to get an idea of things that are out there. And if you want to do your more research, go do research. You want to contact me, we can talk about it. You can do that too. Um, but I just want to put some stuff out there that most people on purpose have never been taught. And it's again, it's on purpose. It's meant to be that way.
yeah,
And we'll go through a whole bunch of different scenarios. So, as a basic start to this, many people, because the media, television, radio, the internet, whatever, always says to people, put your money when you go to save, put it in a bank. It's safe, it's guaranteed, and all the fancy stuff that they tell you over and over and over. And because most of us have never been taught, again on purpose, we think that's the right thing to do. So we go in and we put our paycheck, we put our whatever into the bank. And it's great. But when you put the money into the bank, in most cases, you're getting less than 1%. Now, you may say, okay, so what? But if the stated inflation rate, which frankly I think is a bogus number, I think it's much higher, but if you take the stated inflation rate at 3% and you're getting less than 1, that means you're losing purchasing power. So if you put $5 in the bank and you go to buy a gallon of milk for $5, you're even. But if you're getting a penny interest, now you have 501. But if inflation at 3% means that gallon of milk is now $5.15, you can no longer buy that gallon of milk for the same money you had before. That's what inflation does. And I know it's a crude example, but you can't buy as much with the money you had. That's what inflation does to you. So putting money in a bank is not the right way to go. Now, there are some banks that will give you a little bit more. I would suggest shop around. There's a lot of online banks that are giving 2, 3, 4, 5% interest. If that's the case, don't go to your local store, your local bank on the street corner, Chase or or city or whoever you're using. Sorry, I'm mentioning names, but they're all the same. Um, this is not a bash on any bank, so please don't take it that way. This is just a general statement. Um, but look around, do some Google searches, find banks that are giving you, if you can find them, 3, 4, 5%. Now at least you have a fighting chance with your money to continue buying stuff without being in the hole or not being able to buy. So that's some
Yeah.
basic things. Now, another thing is something called the rule of 72. Now, it may sound a little weird. It may sound, what does that mean? All it means is that if I gave Chuck $1 today, how long would it take for that dollar to turn to $2?
A
That's all it
very
means.
long time.
Well, assuming I get it back in the first place. No, I'm kidding. Okay, but okay.
Don't give it to
No,
me.
don't give it to you. Okay. But let's go back to the example of the bank.
Yeah.
So if you put your money, and let's be generous and say you're getting $1, I'm sorry, you're getting 1% interest. The rule of 72 says take the number 72 and divide that 1% interest into it. 72 divided by 1 is 72. That means that if you put $1 into that bank, it would take 72 years to turn to $2.
Wow.
Now, that should make nobody happy. Nobody. Let's say you were able to find a bank that gave you 3%. Well, 3 into 72 is 24. That means that dollar turns to 2 in 24 years. Still not great. If you got 6%, it's 12 years. Still not overly great, but getting better. So the higher the interest, the less time it takes. Now you're going to sit there and say, which you should, why do I care? The reason you care is if you're putting money away towards your retirement, the lower the interest rate you're getting, the less money you're going to have in retirement. So at 1%, it's going to take 72 years. In my case, I'm 68. By 72 years, I'm long dead.
Your family ain't going to deal with it.
Family's family. So if I wanted to leave my stuff to my kids, it's going to take them another what? 20, 30, 40, 50 years just for that money to double. At that point, my kids are probably dead.
Yeah.
And I keep talking banks. It's any financial institution
Yeah.
wants that to happen. They don't want you to earn that money. They want you to stay broke. And I hate to say it that way, but they want you to stay broke. And I'll give you another example in a few minutes why. Go ahead, Chuck, you were going to say something?
No, I'm listening. I'm all ears, man.
Yeah. So these are little things that, again, we're never told because establishment, rich, wealthy, want us to stay poor. They want that divide between the haves and the have-nots. So everything that I do is meant to educate, explain
Yeah.
to people options and why those options mean something. Because I'm not just talking to blow smoke. I'm trying to educate. Now, one of the things that comes into that is, let's call them what they are, was just credit cards. Now, there's a credit card and there's a debit card. The debit card is you go to, let's say, an ATM or even a store, and you put money on the card electronically. You put money on the card, and you can only use the money you have put on the card. So if I have $500 I put on the card and I go to use it, I can only use up to $500. And unless I reimburse what's on the card to put more money on, can't use the card. Where is that used? Well, a lot of times parents give those debit cards to kids in college for, go buy food, go buy books, whatever, but you're capping it. So if that student happens to not understand money and just says, hey, I'm going to the bar, I'm going to go whatever,
Hey
there's a cap and it
guys, drinks are
stops.
on me. Well, wait a minute. Card decline. Never
Oh,
mind.
I'm sorry. Okay. There's a cap. That's why
Yeah.
parents give students in college that. But if you have a credit card, they're going to give you a credit limit. So let's say you have a $500 credit limit and you start to charge. Some credit cards will stop you at the 500 and say, give me some back. Others will sit there and say, oh, you know what, Chuck? I really like you. I'm going to increase your limit to 750.
Wow.
Chuck sits there and says, holy cow. Not what I was going to say, but holy cow. Okay. Um, I got another 250. And Chuck goes out
Yeah.
and buys the other and spends the other 250. Now he owes 750.
Yeah.
But here's where the problem comes in. You could, and most people unfortunately do not because they don't have the means to, is that bill comes in for 750 and they pay off the whole 750. That's what I do because my own personal thing says I refuse to pay interest to the credit card company. Again, that's a personal thing, but I refuse. I work too hard for my money. I'm not giving away interest. Now, there's a whole bunch of things you can do with that. Number one is you could sit there and say, my salary's not enough. I don't have the 750 to pay. I'm going to give them 200, 300, and I'll carry the balance and I'll pay it next month. And a lot of people do that, and that's okay. I'm not saying it's wrong. But when you do not pay the entire balance in full, then you start paying interest. Now, credit card companies will sit there, and I'm going to use Chuck again as the example. Sorry.
You got it.
They say to Chuck, you know what? I like you. I'm giving you a credit card with a $500 balance. And Chuck says, holy cow, I've got a credit card. And he goes out and spends the whole $500, not realizing that he has to pay back the 500. So the second month, this bill comes in the mail that says you charged $500, but because we like you, we're going to let you pay the minimum monthly payment, and let's call it $20. And Chuck's like, you know what? This is great. I charged $500. I only got to pay back 20. He's happy. The next month, he charges some more and he pays the $20. The next month, he gets a letter in the mail that says, you know what, Chuck? You're such a good customer. We're going to increase your limit. We're going to give you a second card. Go forth and charge. And Chuck says, you know what? I got 500. I used it. I paid 20. Now I got another 500. Do the same thing. Now he owes $1,000. Now they only want $30 minimum payment. But here's what happens. The interest that you owe on that $1,000 could be somewhere around or greater than the $30. So if it's, let's say the interest is 40, but you only paid 30, they still want their 10. That means the 1,000 that Chuck charged now becomes 1,010. They added it to what you owe. And if this continues every single month, you never, ever pay off that $1,000 because you're not even paying enough for the interest let
Yeah.
alone the $1,000 you charged.
Yeah.
And
And
that
don't
is, go ahead.
and don't miss a payment, because now your payment is out the window, because you just
Correct.
almost 2.5 times what your payment would be, depending upon what your
Right.
late fees are.
Right.
And you're just, it's
Right.
crazy. Yeah.
So this whole process is what I call the credit card scam.
Yeah.
It's exactly what I call it. And when I do presentations, my first slide up says the credit card scam. They sometimes they will tell you what's going on, sometimes they will not. However, in small print on the contract you sign, it's in there.
Yeah,
But
like the one that
most
got me, I think
people,
I told you about it. They didn't tell me about a yearly, the annual fee of
hmm
$95. And they
yep,
were going to tell me, if you activate this card, the $95 already comes on that balance, is less
hmm
$95 of what we're
right,
giving you. It
right.
was amazing. I said,
Yeah.
cancel this credit card immediately.
They,
Yeah.
because it's in writing and you sign the application, legally, you now know. Now,
That's different
realistically,
though now. That's different. This credit card I got online, and they told me when I activate that account, that's
mhm.
when that goes. So I didn't sign nothing. Scary.
Okay, so you don't sign it, but
Hmm.
they recorded the session where they told you and you said, okay.
Absolutely.
They
Somehow.
are
Yeah.
not,
Yep.
they're not in business for you.
That's right.
They're in business
Absolutely.
for them to make money.
Yeah. Yep.
So my thought on this whole thing is before you sign on for a credit card, and again, I'm not saying you shouldn't, but before you sign on, read the fine print,
Yeah.
get it in writing. If you're not sure, go find somebody who has the experience who will read it for you and tell you the good and the bad so you know what you're getting into before you sign. That's
Just
all
like
I'm
I found out
suggesting.
today. And we talked about, where I made a payment a day ahead of time. And because it
Mhm.
didn't process on the day it was due, I got charged a late fee, which I thought was really ignorant.
Yeah.
There's no
Mhm.
grace period.
Yep.
And when I reached out to the company, she said, no, there's no grace period. And that blew my
Yep.
mind. So, I got to deal with that.
So I'll give you a different one. Most credit cards that I've seen, you charge today, the bill comes in. Interest is when the bill comes in. The I have a card which I did not read the fine print, but if when because I carry a zero balance, but my bill comes in and says online it says on the third of every month you have to pay it's like $8 annual fee for the card. It's $100 for the year, but it's $8 a month. If I don't pay that bill on the third when it's posted, my interest starts the next day. And one day I missed, so I paid on the fourth, and the bill was like $8.10.
Wow.
So be aware of when the bill is cut so you
Yeah.
don't have to pay interest. Pay
Yeah.
it on that day electronically so it hits and there's a record in the system. Yes, you paid that day. There's all
And
kinds of
I
things
have
you can do.
one. Yeah. And I have one. I don't want to mention the department store, but I have a department store credit card
Hmm
that the company bought them out. So it's no longer the company's credit card. It
Mm,
is by a bank institute on
got it.
behalf of this department store. And you're very familiar with this. Somehow
Mm,
they got away with changing the day that is due of the payment.
mm,
I didn't know it. I have my calendar set for on this day, you
hmm
pay this payment. I'm getting hit with these late fees. I'm like, what's going on here?
Yeah.
That's why I called. I'm like, what is going on? Oh, no, your payment's due on this date. Well, when did it change? And she swore up and down to me that it didn't change when they changed over to that credit card company. What am I, stupid? Was I born yesterday? No, I'm a pretty smart guy.
Yeah.
But I got them to remove the late fee. They worked with me, and lesson learned. Got to keep
You
an eye
got to
on
be
it.
so careful.
Yeah.
And because the economy is not the greatest, businesses are looking to make money any way they can.
Yeah. And I wanted to shift gears a little bit and talk to you a little bit about let's tie this to small business owners and small businesses now
Okay.
because I think, you know, what you're talking about has a lot of merit for not only us as consumers, but small business
Mhm.
owners. They get with
Yeah,
bigger ones, right? Because they're hit with 15, 20, $30,000 credit cards
right.
with a whole different animal of interest fees.
It, yes. And it's
Yeah.
similar types of thinking, but on a business who has 10, 20, 50, $100,000 credit line, for them to be paying interest could end up being thousands a month.
Yeah, right.
So it's
Yeah.
very important.
Yeah.
And I say this to individuals and to businesses. If you, where, again, not everybody can because of the economy, but
Yeah.
if you have to charge, whatever it is, if you have to charge where possible, have the cash available so when the bill comes in, you can pay it off and pay no interest.
Yeah.
Now, part of the reason that you do want to charge is there are things called reward cards. So when you charge on a reward card, depending on what it's hooked into, you could get miles towards airlines, you could get points towards hotel stays, free hotels, towards food. So there are reasons that a lot of business owners and businesses have reward cards for the points.
Yeah.
But when the bill comes in, they have enough cash, they pay it off. So they pay no interest, but they get everything.
Yeah.
When I was, when I started working for a company, again, I won't tell you which one, but when I started working for a company in the 80s, I started doing a lot of travel inside the US. And they said to me, use your own credit card. And as soon as I finish the trip, I submit the expense report and I get reimbursed. So when the bill comes in, I pay it right away and pay no interest. And I was okay with that because as I charged and paid, my credit limit went up, my credit score went up. But what I realized very quickly was I went out and I'm going to say this, I got a Marriott, a credit card tied to the Marriott hotels. So, and I got another credit card for TWA. At that point, the airline's now gone, but back in the 80s, Trans World Airlines was a big airline.
Yeah, they were. Yeah.
And when I would go on all these trips, I would charge the airline, and I always flew TWA. I would charge the airline on one card and the hotel and the food on the other card, on the Marriott card. And I would start getting points. And over time, I built up enough points on the airline that my family, myself, my wife, my two kids took a trip, got 4 free tickets. On that trip, I had enough points on Marriott, so I stayed in a Marriott. I got a week free at the Marriott. So if you have the money as an individual or a business, think about a rewards card, but make sure you can pay it off because sometimes the interest rates on those cards are much higher.
Yeah.
And then you
The
pay
reason I
more
mentioned
interest
that,
than you're getting.
the reason I mentioned that for business was because I was on a website a couple of days ago. And I just happened to come across equipment for
Mhm.
businesses, and it was on one of the stores for restaurant equipment. And there was this small oven that was a single
Mm.
pan put in for your baking things on it. It
Mhm.
cost $13,000,
Gee,
and it was no bigger than a laptop. I kid you not, it was small
gee.
for $13,000. Now I'm thinking to myself, if I'm a small bagel company and I got this machine to
Mm.
bake bread and bagels in to heat them up for customers, I charge that 2 or 3 of those on a credit card. Man, you're looking at $30,000, $50,000 between the three of them.
Right.
And if you miss a payment,
Mm.
or you pay the bare minimum on that, man, your interest rate is just going through the roof.
And then you end
You
up
know?
losing money because the
Yeah,
little bit of money you're going to make by using the machine to
yeah,
help satisfy a customer may not make up what you got to pay in the interest charges and to pay off the machines. So it's
Yeah.
important to do that. Another thing that's really important, and you would understand this from going into restaurants and other businesses, when you get a bill, you buy inventory, you buy equipment, you buy whatever, and then you get the bill for what you just bought. Bills typically say you have to pay within 30 days. Let's call it 30 days. But on that bill, it also says something called 210 net 30. What that means is if you pay within 10 days, yes, it's due in 30, but if you pay within 10 days, they'll take 2% off the bill. That's the 210 net 30 is 2% if you pay in 10 days, the net is due in 30. So again, if you have the cash,
Yeah.
pay that bill in 10 days.
Yeah.
Because if you have a
Yeah.
$100,000 order, if you can, that's
Yeah.
$2,000 in your pocket for that one bill. Now,
Yeah.
you may not be able to if you have salaries to pay and rents to pay and,
Right.
but where possible,
Yeah.
either pay it in full in 10 days or call up the vendor and say, let's work out a deal. Instead of 10 days, can I do 15 days?
Yeah. And that's why I like this topic because financial literacy goes so far, not even just for the
Mhm.
consumer, but the business side, because
Yeah.
it's so important to understand how much goes into this because someone can be so eager to start a business, rush
Mhm.
out there, get a couple credit cards, charge your stuff on there, go out, start their business. Then before you know it, they're out of business because they couldn't afford it. They had two customers all month. Now they're got to pay $3,000 out and they can't afford it. And I think this topic, while we could go on and on about this, and we're short of time because of what we
Mhm.
do, but I think this is a topic that we could hit on, a lot just as a whole topic itself week after week because there's so much to it. And look, we
Yes.
ran this whole, podcast interview with just on credit cards because it gets
Right.
so deep.
Right.
And I know you had so much other stuff you wanted to talk about.
Yeah,
And it's amazing though how financial literacy is so important. And
it
I'm
is.
glad you brought this topic up this week because I think a lot has to be said for people really need to think before they do certain things. Reach out to a guy like you, who understands these things, and 516-727-2294. I mean, Steve's the man. Steve understands. He will help you. He will not let you go and get a
No,
credit card that's going to be like, well, I think you should get this one good. Well, the interest rate's 40%, but you could make $10 off. No, 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 no. We don't want that credit card. But you're
there's
only gonna pay $100 annual fee, right? We
there's
don't
all
want that.
there's all kinds of stuff out there that we didn't even, like you said, we didn't even get to today because it's just too much.
Yeah, it's a lot.
But
Yeah.
I'm here. Again, we've said this before. I'm here. I do not charge for giving advice, whether we talk one time or 10 times. I don't charge. My
Yeah.
goal is to help you to understand.
Yeah.
Then whatever decisions you make is yours. But I want you to understand the pros and cons, or better known as the good, the bad, and the ugly. I want you to understand that stuff
Right. Right.
before you make that decision
Yeah.
so you
Yeah.
don't get into trouble.
Yeah.
That's the reason I do what I do.
And I think we can use me as an example. I think this could be good because after this podcast, I want to talk to you and I want to get your advice on what I need to do going forward. And then we can talk about this next week, about what you find, what you're able to do. And I think that gives people some peace of
Mhm.
mind to say, well, Chuck's using Steve. Steve's got to be legit. Let's talk to him.
Mhm. Yeah,
You
I'm
know,
open. I'm open.
yeah. So,
Yeah,
yeah.
I,
So
I,
I want to make sure that I'm open with our audience as I'm with you
mm,
to know that I trust you 1000% to know that I'm going to bring this to you and you're going to say, Chuck, this is what I think you should do. And I'm going to implement that
mhm.
and it's going to work because that's what Steve does, you know?
I make no money giving advice.
Yeah.
However, what I do get is the satisfaction of knowing that I helped somebody. And
Yeah.
quite frankly, to me, that's more important. Because
Yeah.
if I can help somebody not make and some of you may, if you've been on these podcasts for a while, you know my story. I don't want people to make the mistakes financially that I made. That's why I do what I do, because I royally messed up because I didn't know what was going on. I
Yeah.
went to the point of I was bankrupt.
Yeah.
Yeah.
And real quick, I just ran a business snapshot for a potential client that I ran last month, or no, 6 months ago, and the numbers are different. So I'm going to
Mhm.
show that to them. Hey, this is what I ran 6 months ago. Here's what I ran yesterday. Look at the difference. You had some reviews come in, and I used a different competitor, which
Mm,
skewed the numbers even
right.
different because now you have a totally different competitor that I'm comparing you to. Blew my mind. And I know when I ran that, I knew I was going to find what I was wanting to find, and I knew it was going to happen.
That
So
makes
that
sense.
right there is potential. Another little piece for me is to say,
Oh,
look,
yeah.
get your snapshot, man, because I'm telling you, it's very good, valuable information. You know.
Yeah. So if you have a business, get in touch with Chuck, 410-935-6132. He will go in, he will look at your business from a whole bunch of different perspectives based on his experience. And again, help you and give you ideas of what you may want to consider to increase revenue, reduce expenses, get better publicity. He's your guy.
And that's correct.
Yeah.
What's really cool is how I can really show you how things either are or are not running smoothly, just like with
Mhm.
you with the numbers, right? You're going to show
Yeah.
us whether you're running
Yeah.
smoothly or not. Let's
Mhm.
work these numbers. And I
Yeah.
think we tie really good together with that businesses
Yeah.
because how that works with saving money, helping you see these different processes and procedures to get you through all this financial turmoil that we go through every day, you know?
It's out there.
Man, it's like we could talk for hours and hours and hours, but
Yeah,
I know we
we
want to keep
could.
these podcasts short. We don't want to run
Yeah.
long because we don't want to bore people, and keep it going for hours and hours. But man,
Yep.
what another good podcast, another good
Yeah.
interview, Steve. I say it every week, I love it. This is good stuff. We're educating
Yeah.
people, and it's a wonderful thing.
I love it. I
And
love doing these.
yeah, and our ending is.
It's 4 o'clock somewhere.
See, I'm trying to not give that. I want you to just start saying it. Let's just get the habit of this. Hey, a Friday at 4 because it's four
It's four
o'clock
o'clock
somewhere.
somewhere.
Love it, Steve. Thanks again for coming on again,
My
man,
pleasure,
and
Chuck.
sharing your knowledge. I know we got tons
Mhm.
more to talk about. We'll get to it. Try to every week after week
Mhm.
and try to tie these together. I think that's what
Yep.
could be good, man. But everybody have a great
Yeah.
day, great evening, great weekend, Steve.
Yep.
We'll talk
You
soon.
too. We'll chat
See
soon.
you,
You
buddy.
got it. Thanks, everyone.
Take
Bye.
care, man.
You've been watching the Friday at 4 podcast series with your host Charles Luttrell and co-host Steve Kent. Thanks for watching.